Hey everyone, I hope your day is going really well. Today I'm going to talk about Bitcoin as a shield in a recession. Now, as many of us know, over the past year, there were several banks that failed. And with this, they actually were bailed out. And some of them were actually bailed out directly through the FDIC fund. But there was another indirect way that many of them were bailed out, and that was through the BTFP program, or the Bank Term Funding Program. And so whether banks fail or they don't, you're screwed either way. So you're screwed if they don't fail because the currency is going to be printed up significantly to help bail out those banks. But you're screwed if you do fail and you have more than the FDIC amount in there and they don't bail you out, because then you're going to lose the amount above the 250K. So whether banks fail or they don't, Bitcoin is a shield for that protection, because I think all of us know it is not good to have a fractionally reserved system. That's why we have failures in the first place. In fact, I can speak so passionately about this because right now we have a 0% reserve requirement. I mean, guys, think about that. You can deposit 50,000, 100,000 in the bank. They don't need to keep any of that as their reserve requirement. And that was initiated in March of 2020. They don't have your money. They don't have your money. And I don't know when people will wake up to this. I think it will take a situation where a bank bailout won't occur. Maybe they'll deem that this bank isn't too big to fail, or is not too big to fail. And they'll just say, you know what? We have to let this one fail. And that is a big problem, because where do you draw that line? I mean, they bailed out Signature Bank, or they forced JP Morgan to acquire it. And where is that line drawn? I don't know. But recessions, they also lead to bailouts and stimulus checks. This could also potentially lead to a higher Bitcoin price, because any bailout requires significant printing of money, and significant stimulus also requires significant printing of money. And at the end of the day, it just raises the M2 money supply. As all of us are aware, or many of us are aware, the M2 money supply increased 40%. And I know over the past couple of years, people would say, oh, inflation's 3, 4, 5, maybe 8, 9, 10%. Well, let's be real here. When you went to the grocery store, did you notice your bread go from, $1 to $1.10 or $1.20? Or did you see that loaf of bread go up from $1 to $2? If you think it's the latter, I think you're right. I think bacon went up double, triple. I think food, meat, chicken, all of it went up double or triple. I think they were pretty much lying to our faces. People may think I'm crazy for saying that, but they were. They really were. And I think recessions are actually a good thing to the extent that nature is healing. Overextended people will fail, and that's something we need to see more of, because you walk around. I mean, I was just in Scottsdale today, and you can see people were driving really expensive cars. People were spending like there was no tomorrow. I'm like kind of looking at this and I'm like, wait a second. Like, I don't think anybody is kind of grounded in reality right now. And of course, we all know, too, there's a pretty big wealth inequality in the U.S. And specifically, you can look at Scottsdale as the benefactors of all the asset appreciation and accumulation over the past couple of years. But in the end, we need to think about the common worker. We need to think about the guy that has to buy that cup of coffee for a long day at work, and whether or not, if his coffee goes up from $1.50 to $2.20 or $2.40 or $2.30, that's 80 cents. What if he only had $2? He's not going to be able to buy that coffee anymore. That's painful stuff, guys, because once you get that at the masses, a lot of people start to wake up and start to say, you know what, something's broken here. Bitcoin in cold storage is yours. You own the bare asset. You don't own a claim on that bare asset. You own the actual underlying asset. And so banks failing, massive stimmy checks, massive bailouts are all things that I think should wake up people. We saw it in 2008 and 2009 with the Occupy Wall Street. We saw it with the GameStop saga just recently. We keep seeing more and more situations of the haves versus the have-nots kind of being further divided. And my thing is this. You work so hard in your life for money. Why would you want to see that money get debased 3 to 5 to 10% a year, which compounds over time? When in reality, like if you put it in the stock market, stocks are overvalued. Does everyone really need to be an investing expert to hedge themselves against inflation? This isn't right. What about when you go look at homes here in Scottsdale or Phoenix even, and they're all owned by big corporations? To buy the average house right now in the United States, you need to be making $140,000 a year. Think about that. When the average salary is only about $69,000 to $79,000 a year, more than almost double. That's insane, guys. And so, because we're kind of seeing this moment in time where everything is fake, nothing's real, and things are becoming increasingly disconnected from reality, we're going to also see a lot more pain with those that have to work 9-to-5 jobs, those that have to work, middle class or lower middle class folks. They're going to be increasingly strained. And look, I'm all for the free market. I believe the free market is the solution to a lot of things. But you want to know what isn't the free market? Bailing out Silicon Valley Bank. Bailing out a lot of these big banks that are private companies that literally operate at a profit and then giving CEOs big golden parachutes. Meanwhile, the average working man needs to figure out how they can avoid debasement. Well, I'll tell you this. The way I've avoided debasement, not financial advice, is I've bought Bitcoin. That's personally how I handle it. And at the end of the day, it's a volatile asset, right? You'll see 10, 20% swings. But over the long period of time, it has tended to prove that it will go up over time. Nature heals in recessions. Why can't we see Jerome Powell? Why can't we see the Treasury? Why can't we see us move to a higher interest rate environment where we even maybe see a little bit of deflation? Well, that wouldn't work because all the people that own all the assets and the rich people in this country, they tend to lobby politicians and tend to lobby people to make sure that things remain hot. Inflation, I do look at it like a warm blanket. It feels good at first, but sometimes it gets too hot. And once when it gets too hot, it burns. And it becomes harder and harder to take off. And what first felt really comforting and good now becomes painful. And I think we're at that painful part now because it's just sad to see, maybe you got to stay away from the social media too, but it becomes sad to see people on a fixed income or those that make minimum wage or even a medium wage. They can't rely on their money. They literally need to gamble it into risk assets because if they don't, they're not going to be able to catch up. So what do you guys think about all this? I think Bitcoin is a shield in a recession. I think it is a good component of any portfolio if you're in TradFi. But I also think at the end of the day, we need more education in the space and not to just buy the asset, but to study it in detail, learn about it, meet people, go to conferences, go to meetups, etc. Because Bitcoin has proven to be pretty well. Doesn't mean it will in the future, but it does have a good base of people that understand the economy and economics, and we need to learn from those kind of people. Anyways, what do you guys think? Do you guys think Bitcoin is a shield in a recession? It's never gone through one, so we don't know. It was birthed out of the 2008-2009 recession. So if we see a deep, dark recession, right now it's been trending as a risk on. So it may go down actually with the stock market. But I do think it is going to be very scarce in the future, and you might want to have some, especially in case it can help weather some assets such as dollars, which are perpetually getting debased. But what do you guys think? Anyways, I hope you all have a good rest of your day. SatsMate is out.